traders, what up investors? Ken here from Dyslexia Investor, and thank you for tuning in for another fantastic video. Today, we're going to do looking at a stock recommendation from an individual named as Tom Nash. Again, you might know him. He's fairly popular within the YouTube, really covering a lot of stuff in the financial stocks and really just in the business kind of market of just stocks and the financial industry. He just did a recent video, and I really I want to highlight it and kind of go through it on a particular massive stock explosion of potentially 50% upside on this particular basically semiconductor memory manufacturer, and that is of course MU. So Micron Technologies is again ticker symbol MU for the ticker tag. So looking at this here, I will leave the link in the description down below for the Tom Nash video to kind of run through. He does a fantastic job on breaking down some potential growth revenues, breaking down the fundamental story, and I completely agree with it. He does a really great job on breaking down potential evaluations and so forth. It's very much more on the conservative side, which I really do greatly appreciate, and not really just kind of froth things up and kind of make things adding zeros and moving decimal points where they shouldn't have, and just making things seem a little bit more too greedy or too happy in that sense. So long story short, we're just going to be jumping into the technical side. So if you want to get the fundamental story, check out Tom Nash, fantastic individual. Make sure you hit that thumbs up on his video as well. As you can see, I'm already subscribed, and as well, if you hit the thumbs up on this video and subscribe as well, we'd greatly appreciate that. So what we're going to be taking from this video, again, look at the fundamental side. We're going to be looking at, hey, he's looking for the potential stock. Again, it's trading around $86 to $85 as the close of yesterday on Friday, which was the end of April 2021. Basically, the potential upside of 46.87%, which is around 126, let's just call it 127 potential move. And he's not saying this is going to be going to that price in the next 6 months, year, or something like that. This is going to be a little bit longer term investor. He's not a very a day trader or really a swing trader from my standpoint of what I understand. He's very much more long term driven, again, on building in positions around some core understandings and really holding, not buying and holding and just buying and continuously doing research and updating the numbers, which is I completely subscribe to that methodology. So let's go ahead and just peruse and jump right into the charts here. So again, we're looking at ticker symbol MU up here in the corner here. Just recently had earnings, just again a couple of weeks ago, almost a month ago now. We're seeing it really kind of just trade sideways. We saw a lot of the semiconductors. Again, we saw Ford come out with a very large a downfall in potential revenue that they could have gained due to chip shortages, memory, and just the huge demand that we're seeing in a lot of different various components from computing, semiconductors, and just industrial parts within the electronic space. Of course, with MU, the chart has literally been trading sideways here for quite some time, even going into earnings. Again, it had a nice little bump up after earnings, gap up into after earnings, and kind of a small pin lower. Basically has been trading in this range here. We'll highlight it here within the box of purgatory here. Basically around $96 to around $83, and just kind of been bouncing around there for at least the last 2.5 to almost 3 months. Is that going to be potentially kind of creating a tight base? Is this going to be potentially a break swing higher? Theoretically speaking, as we're looking at the charts and looking at the tea leaves here, we're seeing the 21 EMA, which is the yellow line here that we love to see the momentum kind of drive. It's very choppy right now. Again, we're kind of slightly below the 50 SMA, which is that red dotted line here as well. So that's the line that a lot of technical analysis folks use. So that's a good indicator of hey, that's slightly below it. We are above the 200 EMA, so that's also a good sign there as well. Looking at some other factors, we have the TTM squeeze slightly still pushing us lower. That kind of is in tune with the moving averages as well, and of course with volume. Volume has been very choppy here. You can see on large moves ups or down, we're seeing a lot of significant volume. So normally if we want to see a bottom in place, which is again not the complete correction of the term, is seeing very on in a selling kind of atmosphere, seeing very high volume, but not going anywhere. So if it's on like a downward trend, so we saw the same volume today, but have the same volume bars over here, but the stock didn't do anything, that just means very tight capitulation, potentially being more of an optimist that could be further skewed to going to the upside. And at the same note, the Tom, again, great analysis, put a price target at around 126 to 127. Again, this is not like a Tesla where it just has crazy volatile moves. It does have pretty significant moves. You can see here, ever since again, we always come back to that October timeframe of last year, of 2020, where everything just took off like a rocket ship. Most stocks from a lot of different sectors really had a large ramp higher here. And we're seeing that, again, that kind of dwindle off here. Again, we kind of saw that top out here around that 96 range. We are pulling that from a weekly chart. So we peruse our way over to a weekly chart looking back 3 years here. We're seeing that momentum kind of die off here. We're seeing the Chaikin money flow, which is, again, the larger standing points of institutional investors and momentum behind that. We're seeing it kind of dwindle here lower. That doesn't mean it's going to come crashing down, but potentially. So Tom Nash stated very well in his video that he's not having a current position in it, but he's looking to enter it and letting his subscribers and everything know ahead of time. So that potentially some first level of support coming in here on the time frame he's looking at would be potentially around $82.30. So if that does break below that, we could see some potential further downside in the short term. So that $82 to $83 range lines up with that Fibonacci retracement from the previous swing high to low on the weekly chart. We also have the 89 EMA. I have to get some t-shirts or some cups made on that. That has been a very strong line for us the past couple months here. The 89 EMA seeing a lot of support coming in due to a lot of market volatility. Again, by market volatility doesn't mean it continues going down. Volatility just means very large swings up, really large swings down, and a lot of capitulation in that standpoint. So seeing this support level around 89 EMA and this Fibonacci retracement, kind of sliding it again from the previous low we saw just on the 325. So the March 25 here low here in the short term around 82.40 could coincide in the short term support. Again, flipping back into the weekly chart, you can kind of see here that has been a hell of a move higher here. Again, we really kind of ratcheted higher, holding the 5 and 8 moving averages. Just recently, we've kind of broken that trend. So in the long term, initial level of support kind of being here, maybe meandering and kind of trading sideways for a little bit. We can easily, again, the next level, if it does continues to kind of to come off these levels here, would be the next level of support potentially around $76.36. That's what I want to be potentially looking at, potentially adding to the stock here if you're interested in this level on a long-term perspective. Each people have their own trading philosophy, their investing philosophy. They want to buy high, sell low, whatever they want to do. Most likely people want to buy low and sell high. So it's going to be very difficult for a lot of people to buy when the stock's potentially kind of coming down here. Again, Tom does a really fantastic stuff on understanding the CEO, the perspective of the growing demand, which we're really seeing here, but just having a little bit of a glut and just having a little bit of issues with supply chain and really kind of getting things up and running again. With the standpoint of his price target, it's very much within reason, but you have to have a very large asterisk, or I don't know how to make an asterisk with my hands, the sense of it's going to take time to get to that level. Because if you go into, again, Tastyworks, this is what I use for trading platform, completely fantastic trading platform. If you're interested in an opening account of $2,000 or more, please check the affiliate link down below for an opportunity to select 100 free stock positions or a 10 potential call options. So looking at MU, you know I love, this is always the back of the envelope. This is not like I'm writing this out on a whiteboard math. I always look at the options chain. So what is the projections for January 2022? The expected move is nearly $21 plus or minus. So, okay, that kind of would potentially put it up to the 70 percentile on the bell curve around that $100 range within a year. That's, again, very high. The probabilities are within the 60 to 70% range of it hitting that range, but again, that is well over 265 days away. Looking further out to January 2023, they're only looking for $32 plus or minus. So that still doesn't reach that level again, what Tom is talking about around 126, and seeing that level to kind of break through. Not saying the options market knows everything. These are just looking at the probabilities of it reaching at those ranges, and really not seeing it really come into fruition and having the options market kind of agree with you until basically 2024 or 2025. Again, Tom does a fantastic job on breaking down the basically to 2026 numbers, and that really kind of is in line where if we continue to see the demand and really seeing this kind of prosper here, we can really see the stock run up quite a bit here. Want to take a standpoint and looking at a max chart here. As you can see here, MU, like a lot of industries, have cycles. So what is a cycle? Like, okay, people have a ramp up cycles for airplanes. There's a ramp up cycle for computer parts and upgrades. It's usually, the computer parts industry is usually 4 to 5 years. You get a very large influx of this kind of large run up. So this is my only caveat on a very like a trend basis here. Not saying we're in a bubble here, not putting that little stigmatism or those little PC words out there of creating a bubble or crash, but we are very highly elevated here. Looking on the RSI, not extremely, the Jacob money flow kind of puts us down into some an even range here, but I can easily see some trading sideways, maybe a slighter pullback in the near future before we potentially even try to get that step higher. But a lot of things need to happen for it to be proven this way. In the same site, we're seeing these very large run-ups before, but once we start breaking some trend changes, another great aspect of this, again, this is a monthly chart. Okay, this is a monthly chart. This is just the beginning of 2021 right here, and we're seeing this large influx again. Looking at that October of 2020, that very large move higher. Potentially, where does that? This is the 5 EMA lines up exactly with the $83 price target again, and that what we talked about before, that 75 to 76 price target as well, coming in around 75, which is the 8 EMA on the monthly chart. More likely on the monthly chart, I actually like closer to the 21 to 34 on buying very aggressive positions on things you really believe in. So that would kind of put it between 62 and 54. So that is a very hard, sometimes a pill to swallow. The monthly chart doesn't always do the greatest justice because most people honestly don't have the diamond hands or the fortitude to hold positions for years at a time. So that's a very large caveat that I'm giving here is like, hey, if you really like this position, and I think Tom Nash does a pretty good job on describing it, you're going to have to hold it and potentially scale in multiple times. So you have to build your strategy according to that. So you're not dumping 100% of all your money at basically the market open on Monday at, let's say, $86, something like that. You have to kind of slowly work your way in. Like, let's say, figuratively speaking, you want to put $1,000 in this, you would potentially add 25% of that position potentially on the next market pullback of 4 or 5%, or even to that $83 price target. Again, if some more significant news comes out, you maybe potentially will add a little bit more, maybe 15 to 25% more of your initial holdings or your size that you're looking to add around that 75 to 70 range. But again, you have to tie yourself to the story, and you have to have a plan of just not like, let me just throw my money at it and hope it sticks and I make money from it. It's like you have to be, it takes a little bit of work here, okay? This is not just an ATM where you just throw money at it and it just magically adds numbers up for you and it prints money out for you and gives you 30% year-over-year growth in your stock trading portfolio. There has to be some due diligence here and some common sense here of like, hey, stocks just don't continuously go up. You have to have a plan. Do not put in 30-40% of your capital on one stock at the opening on Monday and hope, oh, it went down 5%. You flipping idiots, you stupid YouTuber stock gurus. Why did you tell me to buy this? Like, that caveat, you have to be taking some responsibility for your trades. All right, on that note, thank you guys from the bottom of my heart. You guys have a fantastic weekend, and I'll catch you guys in the live stream on Sunday. Peace.